All right, let's get to some of the other questions, Randy. Let's start off with one for you, kind of going in line with what we were actually just talking about: fire zones, flood zones,
Sure.
fire plains. Give us a little bit more on that. Obviously, flood it can flood. Fire, you're in high risk of having a fire. From the insurance perspective, what are some of the things you guys are looking at? How do you make those determinations?
Well, with the flood, those high-risk flood zones are determined by FEMA, the government program. So I believe lenders, and Ryan, you're probably familiar with this, but with respect to the loans, lenders will require flood insurance from the buyer to qualify for the loan if it's in a high-risk flood zone. So you do want to, again, I think it all gets back to just don't be that guy that calls the insurance agent 5 days before close and goes, "Hey, I need homeowners insurance. I just found out." Don't be that guy. Do your research and your due diligence both on the house and on the insurance well before you put the offer in. And then in terms of the fire zone, again, there's a standardized thing called a fire line score, and different areas of California have different risks, and with an address, your insurance broker can check. Most areas, like I can tell you right off the bat, Julian, Ramona, real tough to get insurance. Poway, hit and miss, but can be tough. Rancho Bernardo, Penasquitos can be tough. I see Ryan nodding his head. But inner city areas, downtown, University City, National City, Chula Vista, generally all green lights for those type of areas. But just don't leave it to chance. Just give your agent a call. Usually in 5 or 10 minutes, he or she can run those checks for you. One less thing to worry about. That's what I would say.
That makes sense to me. All right, let's grab a real estate one. All right, so one that was sent in: how are we keeping buyers and sellers safe today? There are a lot of different protocols we have. You'd actually head over to the website, wannabereg.com. They're on the homepage, I think, at this point. Basically, we've moved everything into the virtual sphere that we can. All right, so if I'm going to meet with a buyer, if I'm going to meet with a potential seller, initially, pre-COVID, the buyers would come to the office. Sellers, we would go to the house. At this point, we're not doing that. Any of the buyer consultations, real estate advisor consultations are being done on Zoom. And that's just, it is simply safer at this point, protecting the home buyers. All right. When it comes to the sellers, in general, we're not going into the house. We've set up a lot of different very interesting systems in place to do a virtual listing appointment. A lot of it relying upon the homeowner to take some photos, to take some videos, to upload them specifically so we can do the analysis that we would normally need to do when we're walking through. And then from there, the listing presentation and the marketing presentation itself are actually being done online. As it pertains to going out into the field, again, there are no open houses. Let's put it that way. There are no in-person open houses. There are physical showings taking place. There is a property advisory entry disclosure form, property entry PEAD, whatever you want to call it. Basically saying you're going into a house, you don't know what you're going to get, and if you catch the coronavirus and die, the homeowner is not responsible. Right? So anybody who's wanting to go look at a house, you're going to have to sign that at this point. So am I as the agent. It's going to take you in there. Masks, gloves, booties, hand sanitizer, social distancing, all in place. Those of you guys that have more questions about this, call, text, or email. You see all my info right there. I'd be more than happy to explain this. I do not want to take the next 15 minutes to dig into that because it just is too much at this point. But the main point I want you to take away from this, we've moved a tremendous amount of this to the virtual world. And when we do need to go do something in person, your safety is always in the forefront of our mind. Masks, gloves, temperature checks. If somebody's feeling ill, they are not working with people, etc. All right. So that is ultimately how we are keeping people safe. All right, Randy, let's go to an insurance one. Biggest concerns that you have with getting a policy after buying, or that a buyer should have. What are some of the biggest things they need to be worried about? And we know we've talked about fire, we've talked about flood, we've talked a little bit about water.
Okay. So one other thing is the condition of the home. insurance companies want to see quote unquote pride of ownership. So if you're buying a home that is needs a new roof, or the fascia is dry rotting, or just some other conditions that just look like a home that's not taken care of properly, homeowners insurance companies will not want to insure that home. Basically, it's considered a higher risk. So that's one thing to be aware of when you are buying the house. Make sure, and it all ties back to have your insurance company check ahead of time. Have your agent go out there, take a look at the outside. He or she doesn't have to go inside the house. It's really the outside that they're looking at. That's one issue that I think is pretty important, the pride of ownership. And if you're going to do construction on a home, that can be an issue. So if you buy a home and you're going to bulldoze it or do the old builder owner one wall standing renovation, homeowners insurance won't cover that. You're going to have to get a special type of policy called a builder risk, or what's called course of construction policy. So best to tell your agent or broker what your plans are ahead of time. Don't be that guy that tries to sneak it through, close on the insurance, get it going, and then all of a sudden there's a surprise, because you might end up with something that's not covered. Also, if you're buying a house and it's going to be a rental, make sure you tell your insurance carrier it's going to be a rental and not owner occupied. If your insurance carrier writes it as owner occupied and you have a tenant in there and have a claim, guess what? That claim may not be covered, even if the house burns down or it's something that has nothing to do with whether it was tenant or owner occupied. So I think, again, prudence, be upfront, and give your broker or agent ample time to do the service they need to do for you.
Great advice. Great advice. Absolutely. It's amazing that people still try to get this stuff through. It's like people getting a high-speed chase from the cops. Good luck. There's that thing called a helicopter overhead. You're not outrunning that thing, man. What are you doing? Let's try to do some insurance fraud. They won't find it. Okay. Good luck, my man. Good luck. All right. Let's go to another real estate question. This is a standard question every week. When are we having the price drops? We're not. How about that? So let me explain a little bit more. All right, when are we going to see pricing coming down? There aren't buyers out there. The stock market's gone bad. We have a pandemic. Oh my gosh, the last time this happened, it was 2006, 2007, and the pricing, and when are we seeing price reductions? When are we going to see foreclosures? When are we going to see short sales? The fundamental differences in the housing market from 2006, 7, leading into 2008 versus leading into where we are today are two fundamentally different things. The housing market in general drove that recession in 2008, where we are in a position to pull the economy out of it this time. All right. So just speaking about San Diego County, we are either continuing to set new all-time median sales price records each month, or we are in the general ballpark within a couple $1,000s of it. There is nothing indicating that pricing is going to come down. There is the supply and demand, and everybody is saying, oh, well, there's nothing for sale. There's nothing for sale. True. Well, there aren't any buyers, so it's at an equilibrium. But now more buyers are coming out. So if we now have 10 buyers from one home, what's going to happen to the price? What happens if more homes come on the market as more buyers come on the market? We stay at more of an equilibrium. We would have to see 10 homes come on the market for every 1 or 2 buyers, and I'm making up those numbers as I'm talking here, so let's not try to hold me to that ratio. But that in general, we would need to have a massive surplus of properties for sale like we did in 2006, 7, 8, 9. We don't have that scenario. So I don't see big price drops coming. When we're talking about distressed properties, pre-foreclosure, foreclosure, getting a weird feedback. Randy, are you hearing that weird feedback?
I'm not. But then again, I've got wax in my ears most of the time. So
my computer is making it sounds like it's passing gas at me. We'll see if it's on the recording. Anyways, so back to it. With the last part of it with the distressed properties and whatnot. Last week we spent a lot of time talking about homeowner equity. And we said the average mortgage in the United States has $177,000 worth of equity in it. And that is a very big number. Even if we took a massive hit to the housing market, 25% instead of 20%, like we saw in 2008, these homeowners are still going to have $125,000 to $130,000 worth of equity in their home. They're not walking away from it. And if this continues to go on and on and on, and we stay at home and lockdown and all this craziness, then we could have some issues if we get to August and September and we're still doing this. All right? But as we are right now, I don't see there being very much in the way of price drops and distressed properties. All right. So there's that. We kind of lumped two in a row into that. So, all right, Randy, got a couple more for you. What's the strangest claim you've ever seen filed as it pertains to either homeowners or renters?
Strangest claim ever filed. I'm saying it out loud. My assistant's about 30 feet away, and I'm wondering if she remembers any. But we've had some doozies, that's for sure.
Any off the top of your head?
Oh, yeah. Actually, she remembers one, but I remember one. I had a customer with a mattress. They got a new mattress in the rental home, and it was right out of a Seinfeld episode. The mattress had a horrible stench, like it was possessed. And they had all kinds of experts come in with zoot suits trying to get the odor out of the mattress, and they literally couldn't live in the house. They were getting sick. They were getting nauseous. The mattress manufacturer, the retailer, nobody would accept responsibility. They turned in a claim, and of course that wasn't covered. And this went on for months and months, and I'm not even sure what the end of it was. It happened years ago, but that was definitely one of the oddest claims I've seen. Yeah.
A mattress. Okay. All right. I got it. Let's go with another one for you, Randy. So this guy wrote in, what is the difference between different insurance companies? Is there a difference, and what sets farmers apart from the others?
Well, there's a lot of difference. So a lot of companies are geared towards the business model of being 1-800 cheapest, don't have an agent. You're basically a number computer. Now, some people like that. Some people don't. So if you like that and you just want the cheapest policy possible, if you want the cheapest policy possible, you're going to be switching insurances every 6 months or every year because it literally gates up and down. So Farmers is an all-service insurance company, a little bit old-fashioned, but we believe in having an agent, personal agent. My customers know me. We do reviews every year as often as we can, sometimes more, and we want to customize the policy and coverages to be what the particular customer needs for their needs. So a lot of customers, it's just one size fits all. And it also, with respect to the claims, a lot of insurance companies on homeowners claims during the wildfires, you would see issues where farmers' customers had checks in their hands while their neighbors hadn't even gotten return calls from their insurance company, some company on the East Coast, and they have to fly out adjusters. And so with Farmers, our main claims office is right here in Sereno Valley. The headquarters for the whole country happens to be in West Los Angeles, so California. Insurance is a strange product. It's different than pizza. When you order pizza, you taste it and you eat it and you decide, oh, this is good or this is not good, or it's a ripoff or it's not. With insurance, it's kind of like paying to the air, and you don't get to taste that pizza unless you have a claim. And a lot of people go years without having a claim. So it's kind of difficult sometimes to explain to somebody why they're paying a few $100s more. But I guarantee you, when that house burns down or $20,000 water claim, and the person with the cheap insurance is just left doing everything themselves, and the insurance company's cutting corners, and they throw up their hands and just say, I give up. I don't have, I have to work and I can't deal with this, and just pay me whatever. So that's really where the difference is how the claims are handled. There's a tremendous difference from company to company on how it's done. Yeah.
That makes sense. Would it be fair to say you get what you pay for?
In most cases, that's very fair to say, yes. Good
Right.
point. Yeah.
I gotcha. All right. Got a couple more real estate ones. So one was, how is the inventory? We talked about that already. 1.8 months in San Diego County. That means extremely low. We know more and more properties are coming on. That's basically where we're at with inventory. The last real estate question, I do have one more for you at the end, Randy. The COVID-19 addendum, what is that? This is the California Association of Realtor, or CAR form, CVA, coronavirus addendum. It came out within a week or two of all this starting, and basically it formally declared the coronavirus pandemic a force majeure, basically an act of God. People have the ability to cancel out of an agreement, whether you're the buyer or the seller, if you have been directly impacted by the coronavirus. That's the best answer I can give you on that. I thankfully have not had to handle that situation this year with this. I don't think our entire group has at this point, but it is in place, and it is something that everybody does have to take into account. But at the end of the day, it's there to protect the buyer and or the seller. Should there be a very serious issue with the coronavirus, they are not going to be forced to either sell their property or continue to purchase somebody else's. So that's those two right there. So Randy, the last question, and this one is mine actually for you.
Okay.
What is the number one thing that people don't think to ask an insurance agent when it comes to either homeowners or renters that they should be asking?
The number one thing they should be asking, I would say, ask what's not covered, because there are a lot of exclusions with most policies. Even your best policies have a lot of exclusions. So, for example, earthquake insurance is 100% not covered by homeowners insurance. And in San Diego, we're really low, pretty low risk for earthquake, but the premiums are really low. So everybody out there, whether you're my customer or not, call your agent, get a quote on earthquake. Usually your average $1,300 square foot home in Claremont for earthquake insurance is $100 a year. So it's really cheap. If something happens, yeah, you got a high deductible, but you're not going to be left with nothing. So everybody out there, get a quote on earthquake. It's completely excluded right now. Good thing to have. There's a lot of other common exclusions. Leaky roof, wear and tear maintenance, those kind of things are not covered. Expensive jewelry or collectibles can also be not covered or severely limited in their coverages. So I would say anything you feel is out of the ordinary for your situation, ask your insurance company. If you're running a business out of home and people are coming in and out, doing daycare from home, definitely check with your insurance company on that.
Makes
I would
sense.
say there's one item that is the one big thing, but there's just a lot of little things. You don't want to find out what's not covered at the time of the loss. You want to do your best to know up front.
Yeah, good advice.